With Aditya Ghosh currently. Let's listen in.
Because for the next foreseeable future, for the next 5, 6, 7 years, we will again do primarily operating leases. So we actually don't see debt going up. And even in the past, in the 9 years that we have been around, our non-aircraft debt has been zero. We have never taken any working capital loans, never taken any non-aircraft debt in an industry where
which
players
has been burdened by debt.
And our total interest expense last year, even on the debt that we have, was something like $19 million. That was our total interest expense last year. The primary proceeds that will come from this IPO will shave that debt by another 30%. So the interest expense comes down even further. So when you take the total operating cost versus what our interest expense is, you know, and look at our EBITDA for...
yes, I'm aware of the kind of growth that you've seen at Indigo. But let me talk to you about the future. And I want to talk to you about FDI, because you've taken a position saying that we're not in need of foreign direct investment. We're not looking at bringing a partner on board, despite the fact that everybody in the business has been trying to boo you, and very publicly so. So is this no for now? Is this no over the next 5 years? Is this no forever?
You know, definitely no for the foreseeable future, because we have never considered it. We've never considered it because, first of all, we never needed the crutches or the walking stick of somebody else. We're standing up on our own 2 feet and running.
That's also an oblique reference to the fact that your competitors needed crutches to fly on, not walk on, to fly on.
What I look at it, the way I look at it is that we have a strong track record. We have cash generating, we're profitable. We don't need that foreign direct investment into us. We're of course very flattered by all the attention we get. But from an operational point of view, from a strategic point of view, the reason for that is that being who we are, the way we've run it, and the people who run it, and the people who own it, we've had great, consistency in direction, consistency in strategy. If you have more owners
so it's a control issue.
It is absolutely a control over our future issue, and that control is over strategic direction. Because.
But what if there was a like-minded partner who came on board and their strategy was aligned to your strategy and vision?
Yeah.
You haven't met none of the suitors so far. None of the suitors so far.
We haven't had the need to. We haven't had the need to. So necessity is the mother of invention. We just haven't had the need to.
Okay. Since we're talking about necessity and we're talking about adaptability, there's been a lot of conversation on regional connectivity and what happens to tier 2 and tier 3 towns and so on and so forth. Your competitor, and I talk about SpiceJet once again, saying that they will order over 100 aircraft in this particular financial year because regional connectivity is going to be a big play for them. I know that you've countered the argument saying that you still don't operate to 23 other airports where you can operate your aircraft currently. But is there the possibility of regional connectivity becoming a bigger play for you, and that then changing the way you strategically look at this?
So, the way we look at it is, regional connectivity has nothing to do with smaller airplanes. So, if you think that Dimapur and Bagdogra and Dibrugarh are regional cities, we are actually the largest operators out of those cities. Our very first airplane did not go from Delhi to Ahmedabad or Delhi to Mumbai, but it went from Delhi to Guwahati and then Guwahati to Imphal.
No, forget the aircraft part of it, whether you will need to order smaller aircraft.
So we will absolutely go for regional connectivity, and we do. In fact, if you look at 3 buckets of routes in India, metro to metro, metro to non-metro, non-metro to non-metro. In non-metro to non-metro, top 10 domestic routes in India, we are 54% of the Indian market. So in that sense, we are actually the biggest regional player. The only thing we have a problem with, problem for us, may not be for somebody else, is we don't want to add complexity and add new types of airplanes and then new types of spare parts and training.
That I get.
And the cost structure goes through the roof.
And that's worked very well for you. So in the foreseeable future, as you build on this regional play and this regional connectivity, is there a possibility of maybe spinning it off as a separate subsidiary, a different brand?
No,
would that be part of your strategy?
Everything is part of Indigo. That growth strategy is also part of Indigo, and that opportunity is also very much a part of this particular airline. Our brand, our airplanes, our growth strategy, our cost, our profitability, everything sits into this one operating entity, which the investor is going to invest in.
Okay. Let me then talk to you about your international expansion plans. And we don't know what happens to 5x20, whether 5x20 stays, comes back in some sort of Frankensteinian form or format. You've publicly stated that you're not...
completely agnostic to it.
You haven't said you're completely agnostic to 5x20, Aditya. Let's be very clear about this.
I'm completely agnostic to it.
You've not been completely agnostic to it. You have very categorically stated that there should be a level playing field. And as part of that level playing field, foreign airlines, greenfield airlines, should have to comply with the 5x20 rule.
No, actually my view is different. As far as 520 is concerned, I'm completely agnostic to it because today there is nothing that stops us from flying international. If we wanted to fly more international, we could have. Similarly, or by corollary, if other players want to fly more international, in a strange way it benefits us because the domestic market becomes even more open to us. So either way, there is nothing stopping us, and if they do, then it benefits us. What I mean by level playing field, and I probably have not done a good enough job to actually have a detailed discussion around it, is that just like the 520 is restrictive, and I'm telling you it is restrictive on new airlines, similarly the route dispersal guidelines are restrictive on incumbent airlines. Because there is a misnomer, or there is a myth, that but you know route dispersal guidelines actually apply equally. Actually they don't. For an incumbent player, the route dispersal guideline says that you cannot reduce even one aircraft, not even one seat, to add international. What we are saying is, or I am saying is, let's create a level playing field. If you want to take 520 away, take route dispersal guidelines away also. Let's get the market to determine what is best for a particular operator. Some operator may say, I'm going to do only international. Some operator may say, I'm going to do only regional. And some may say, I'm going to do a mix of both.
So where are you going to be as far as this mix is concerned between domestic, regional, international?
By far, the priority is domestic. By far. The world is coming to India to take opportunity over here. We would be foolish.
So are we to understand that you would perhaps now scale back, slow down your international expansion
Actually,
plans?
we've slowed down quite a bit. We used to be as much as about 85% of our total revenues used to come from international. Now it's kind of in the mid-90s. 85% used to come from domestic. Now it's about mid-90s. So that basically means that we've actually scaled back. And it's not because we've scaled back. We've not even dropped one flight. We've actually increased flights. The domestic has grown at such a fast pace that as a percentage, international has come down. And that again proves the same fact that I've been going on and on about for the past 10 years. Domestic Indian aviation is growing at a CAGR of 9.5% for the next 20 years. This is the market to be in.
Okay, this is the market to be in. So let me talk to you about other areas of opportunity, and let me ask you about what you foresee as far as your ancillary revenues are concerned. Currently, if I remember correctly, at about 11-odd%. What kind of growth possibilities do you see there?
You know, ancillary revenues has been growing at a CAGR of 38% over the last 5 years. Ancillary revenues used to be 11% in our last fiscal. In Q1, it has already moved up to 13%.
Okay.
But it is nowhere close to the kind of levels that you would see in a typical, well-established low-cost carrier around the world. So there's a lot of opportunity there.
What kind of headroom are we talking about?
Oh, you know,
what would be the global benchmark?
The global benchmarks are in the region of about 25 to 30%. We are only at 13. Now, a lot depends on how the market behaves, how regulations change. So all I know is that there's a lot of opportunity left out there, which can only be tapped once the unbundling and it becomes more free for airlines to start offering different products at different prices. Like I've always said, it should be a menu of products. And then you tick mark against whatever you want to take and what you want to pay for.
You know, let's talk about costs as well, because we were talking about revenue possibilities. You've done a great job as far as costs are concerned, and you've publicly stated that you've been able to bring costs down literally to the bone. How much more can you eke out as far as costs are concerned? And I ask you this also in the context of fuel costs, because that's about 40% of your operating costs today. With the NEOs coming in Q4, I believe that could further impact your fuel costs. By how much, and what kind of possibilities does that open up?
So, you know, what you raised, if there was one question as to Why should an investor invest in Indigo? The answer to your question lies in that. 50% of our cost is fuel. The Neos start bringing in 10 to 15% less fuel burn. 10 to 15% of 50, there is 4 to 7.5% margin improvement every Neo that comes in.
Okay.
It's a game changer in our business. By 2018 March, which means 2.5 years from now, a third of our fleet, we will be flying 154 airplanes at that time. A third of our fleet has already become the Neos. By 2021, 2022, almost the entire fleet has become Neos. So we have actually fundamentally brought our cost structure down from being the very best in the world. And that is what really, brings about this confidence to us as well as probably a new investor.
There's always been this talk about Indigo's sale and leaseback arrangement. Explain this to us for the benefit of the lay viewer, because there's always been, inflated profits and so on and so forth, sale and leaseback, that's what's working as far as Indigo is concerned. Explain that to us once and for all. Let's rest this case.
So for us, an airplane is like a factory, right? Just like a motorcycle company sets up an assembly line to manufacture motorcycles, we buy airplanes to run our business. Just like you finance an assembly line, we finance our airplanes. Just like you would finance your assembly line at the sharpest level to be able to make sure that your end cost is right, we get our airplanes at the sharpest levels and finance them at the sharpest levels so that our cost structure stays low. Every airline in the world who does operating leases gets discounts. Every airline in the world who does operating leases and sale and leasebacks gets a gain. Almost every airline in the country does sale and leasebacks just like us. There is absolutely nothing unique about us. The only thing that is unique is that our level of discount may be more than others because we negotiated sharper and we ordered 530 airplanes.
So it's more the volume game.
Absolutely. And then we did it over a period of time, and while the others haven't. So you cannot blame Sachin Tendulkar for being a great batsman because he's got a great bat. You can't say, Sachin Tendulkar, you are a great batsman, that's because you got a great bat. Of course he has a great bat, he's the world's best batsman.
Okay, you've compared yourself to Sun Pharma, Bajaj Auto, now Sachin Tendulkar. I'm keeping a track, Aditya. But let me talk to you about some
of the... Not to sound arrogant at all.
Not at all. But let me ask you about some of the other issues as well. And this is again, since we're talking about the sale and leaseback arrangement, on this commission business, because that's been something that's been raised. On the P&L, it comes in at about 1,694 crores received. And on the balance sheet, it shows up as 1,685 crore rupees as receivables. Can you explain this is the Airbus commission?
This was the deferred incentive.
Okay.
The deferred incentive is nothing but that various types of incentives we would have got, not just from Airbus. It would be from variety of other manufacturers. Because it's that same assembly line thing, right? So you got an assembly line, maybe the robotics, you've got a certain amount of discount. The tooling, you would have got a different discount. From the belt, you would have got a different discount. So when it all comes together, it sits as a deferred incentive.
Okay.
And to answer even the previous question you asked me, and I want to dispel this myth, we do not take it into our P&L.
Okay.
We do, although Indian GAAP allows it, and a lot of people do, we do not take that sale and leaseback gain into our P&L.
Okay.
We actually amortize it over the life of the lease to smoothen our cost structure down. We actually take it in the most conservative way and we net it off against our lease rentals. It's just another way of bringing our cost structure down.
Okay. So since we are speaking of costs, and this was something that you were working on as well, is to try and bring your distribution costs down further. What can we expect on that front? What is going to be the strategy going forward?
So our focus is now more and more onto our website, our mobile app, our call center. We're more on mobility. We're in the midst of kind of, revamping our mobile app. We've started, issuing some new editions. So if you kind of today go to our mobile app, it keeps asking you whether you want an update or not. So we are going to keep focusing on our own channels. Not to say that, travel agents are not a big part of our distribution thing, but our focus is now going to be more on our website and our
And
mobile
how much would that bring costs down further?
So whatever commission you're paying, our commissions are anyway lower than others because of our volume that we have with our travel agents. And, so maybe it may not move the needle too much, but frankly, this a business, and especially Indigo, is not about $1 billion idea. It's like $1 billion $1 idea. So we'll keep chipping away. It's kind of in our DNA, I guess.
Okay, so speaking of ideas, and this is something that a lot of people who fly Indigo, including myself, want to know.
I know where it's going.
Frequent flyer miles, are we headed that way finally? I know it took you, what, 3 or 4 years to finally decide whether you are going to serve hot beverage
or not.
On air or not, but are we finally going to see you move towards things like frequent flyer programs or not?
Look, your demand is justified and your surprise is justified too, because we must be the only airline of our size anywhere in the world which probably doesn't have a frequent flyer program. We're not going to put a frequent flyer program. Our frequent flyer program is our reliability. And the reason for that is, again, frequent flyer programs add a lot of cost, they add a lot of complexity, and more often than not, it disappoints the customer because you have these blackout periods. We are so profitability focused, we are so cost focused that we do not want to compromise on that yield. We keep our fares at a predictable level, where neither does it go to the 500 rupee fire sale, nor does it climb up to 30,000 rupees. And that ensures that a regular customer and very, very important customers know exactly what they're paying for.
You know, I don't know whether it was mentioned as part of your dispatches or not, but how are you reading, A, the competitive environment, and B, this business of whether the government is actually going to come in there and intervene as far as pricing is concerned? I know there's been a bunch of consultative meetings with industry saying, all right, toe the line, or we're going to come down hard and get you to cap pricing. Do you really see that happening? Do you think that that is a threat at this point in time, or will it be a reality? And also in terms of competitive pressures, now with capacity coming back as far as SpiceJet is concerned, and I know before I was leaving office, I got a press release saying 93% PLF, tops the charts for the 6th month in a row and so on and so forth. How do you read the competitive landscape?
Yeah. So as far as the pricing cap is concerned, actually, even to be fair, even in the consultative committee meetings, the government has frankly never told us, and full credit to the government has never told us that we are going to actually put a cap. The government has always said, look, don't do these 5 rupee fares and don't do these 30, 40,000 rupee fares, which we actually agree with. Our view is that let's find a way that people run their business in a more sustainable manner, where if you are not selling below cost, you also do not have to charge exorbitant fares right at the end, which is the way we follow it. Now, in the unlikely scenario, and in that hypothetical scenario, if there is a price cap, then the airlines which have the higher cost structure suffer the most. On the other side, if there is some kind of a guidance that you cannot sell below cost, then again, every other airline who has a higher cost structure than us will actually have to charge above us. So we are actually completely insulated from that fear, risk or whatever.
And you think that it's unlikely that we will see regulation? It is unlikely,
and if it happens, we'll benefit the most.
Okay.
Now let's talk about competition. Irrespective of what the competition is and who or where it comes from, whether it comes from India, whether it comes from overseas, whether it's a new player who comes in, or whether it's a new player who grows up here, it all again comes down to cost structure. Today, our cost structure, excluding fuel, is the lowest in the world. Our cost structure, including fuel, is the lowest in India. So irrespective of who the competition is, we are actually competing with ourselves. The way we look at our business is our total profitability, and can we each year find a way to bring our cost structure down. That is
Okay, that's a very interesting conversation.